October 11th, 2012, we had David Burrows of Barometer on the program. At that time, he brought with him 3 top picks. Your picks are down a combined 12.25%, but it's largely because of top pick number 1, which is Yamana Gold. That one's down more than 45%. You still own it?
No. We have virtually no golds. You have to build portfolios that are in context of the current market. And when markets go through shifts, you have to be able to transition your holdings. And certainly over the last year, golds have been way out of favor, which is why we run stops on all of our positions. Mm-hmm. So we've gone through virtually all of this year being short golds, which has been a positive thing. But certainly if you looked at portfolios in November of last year, what was working were low economic sensitivity, highly interest rate focused. Mm-hmm. And as you've had the rate increase over the course of the year, you've had to rotate holdings. And so largely portfolios look very different today than they did then.
I wonder if you're covering your short positions. First of all, did you short Yamana?
No, we did not short Yamana.
Okay. So you just got out of Yamana.
We got out of Yamana. We shorted the group, usually largely using ETFs like the GDX.
Right. Okay. Because I see that we had a double bottom on Yamana just over the course of the summer. Mm-hmm. It looks like it's about to retest that as well. And I'm wondering if maybe the bottom's in on Yamana south of $10.
Yeah, it's interesting because the breadth models that we use showed some strength about a month ago. We put on a 2 to 3% weight in precious metals and promptly got stopped right back out again. And I will disclose that we are short the sector again. So the resource sectors we don't think look very attractive.
Granite Real Estate, top pick number 2. That one's up 6.6% or so. Do you own that one?
We do own Granite, and we've owned it all through the year. But I will say that in November of last year, we had 23 or 24% of our income portfolios in REITs. Today, it would make up about 6%. Mm-hmm. So largely, we have again rotated from pipes, utilities, corporate bonds, and REITs to consumer discretionary, industrials, media, companies that are a little more economically sensitive. We're in a different type of market. The economy's getting a little better.
Okay, and then top pick number 3 is Abbott Laboratories. Oh, for disclosure there, we have had X's all across the screen, but you did say that you still own Granite.
Yes, we do own Granite, and I would buy it here. They've got a couple of $1 billion in cash, lots of flexibility to make additional purchases, a 6% yield that will go higher.
Here's your Abbott Labs recommendation from October 11th of 2012, up 2.4%. Of course, you got the spin-off of AbbVie tied into that. What did you do with the AbbVie share you got?
We did well with both of these. Ultimately, they rallied over the next 2 or 3 months after we were there, but we have since moved on, as I mentioned earlier, to biotech from pharma.
Now, you mentioned that you were stopped out on some positions, so it's valuable to go back and talk about that because we've done that in the past, have had this conversation. You've got hard stops or soft stops?
So, look, things change in the market all the time, and what makes sense today may not make sense in the future. New information may find its way into the market, and if your fundamental view of the business looks like this, and the share price is doing this, it's very possible either you're missing something or something's changed. So we've always had a view you have to have an exit price identified even before you enter, below the price you paid where you go to the sidelines.
As opposed to 5 or 10% below the current price?
Right. So then we ratchet our stop losses. As time goes by, as our positions work, we'll steadily raise our stops. Now, we fortunately have a trading desk who manages all of that. We don't put them out there in the ether waiting for someone to come pick us off. But I think it's very important to have discipline around selling, and I would argue the biggest mistakes you ever make have very little to do with what you bought in the first place and almost everything to do with what you don't sell. So stops are a great discipline.
We're taking a short break. Our guest is David Burrows. He is the President and Chief Investment Strategist at Barometer Capital Management. We're taking your questions today on North American large caps. We've got a line available still at 1-855-326-6266. If you're shy about picking up the phone, that's not a problem. You can email us too. marketcall@bnn.ca is the address. And I'm monitoring the Twitter machine as well. You can fire me off a tweet. Hainsworth TV is my handle. We're also monitoring the Market Call account, of course.